Hello, everybody. Welcome to episode number 100 of Bank to the Future Live. We have been live 100 times. We've been through the ups, the downs, the rises, the falls. In fact, we've been through that for over a decade at Bank to the Future. We were the longest standing company in Bitcoin. We are the world's first crypto securities business. And today we're going to be reverse engineering the Luna, Terra, UST, call it whatever you want to call it, meltdown crash, systemic risk, and the impact it has on Bitcoin and the wider crypto markets, the impact it has at our investors at Bank to the Future. We have the world's largest community of investors that are building and protecting their wealth by investing in the shares of companies changing the future of finance. So I've got a few slides for you. We're going to jump straight in. Just before we do that, if you are new to BF Live, welcome. Hit that like button. That helps us. I go live regularly on my personal YouTube channel, Simon Dixon, where I cover a bit more politics and economics. And this is an episode where we go through the investing, the nooks and crannies of building and protecting your wealth in the financial technology industry. So today we're going to be going through the Luna meltdown. We're going to do it in two halves. Firstly, I've got a few slides for you, and then we're going to jump into your questions. You can get your questions live and ready right now. In fact, a lot of them have already come in. So you can scan that QR code, or you can head over to slido.com and put in BF100. When you put in BF100, no account needed. You can read other people's questions, upvote them, or you can ask your own question. So let's jump straight into the content. So I'm just going to check that my slides are working. And I don't believe I have permission to share. Oh, it's because you're sharing, Azad. If you could stop sharing your screen, then I'll be able to share mine. Perfect. Okay. So hopefully you can see my slides right now. I'm going to switch my camera off, and Azad will tell me if they're not seeing them in full screen. But here we go for BF Live episode 100. And so I'd like to start right in the beginning. If you missed my presentation on Monday on the Simon Dixon YouTube channel, I went through the importance of the El Salvador meeting and the history leading up to that meeting. But let's start where that left off. And that is really that people have been using Bitcoin as a store of value. It was originally created in order to create peer-to-peer electronic cash that you can own, that you can spend, and that has a fixed supply so it can combat inflation over the long term. It has been an incredible combater of inflation. And during the times we live today, in episode 100, the cost of living crisis is crucifying those that saved in fiat currencies like pound, dollars, yen, renminbi. And it's been punishing the short term recently for those that have been saving in Bitcoin. But anyone that has held it for over a 3-year period has kicked the shit out of fiat currency. And they are completely protected from inflation. And if it continues to act that way, then Bitcoin will continue to be a store of value to protect yourself over the long term from the cost of living crisis. Gold has traditionally performed that role, but it has been a pretty bad unit of account and median of exchange. What do I mean by that? A unit of account is you thinking in terms of what your goods are priced in. So if you pay rent, or you pay a mortgage, or you have to meet your cost of living, you are given it and you pay your bills normally in one currency, depending on where you live. If you then get paid in a different currency to the one you have to meet your expenses in, then you have to go through foreign exchange risk, and that causes a very volatile environment in order to manage your finances. For that reason, and because Bitcoin has kicked the shit out of inflation, producing a high and peak of 69,000,000% for those that held it from the very beginning to the end, not that anyone did, but that just gives you an idea. Then using it as a median of exchange to meet your expenses has been pretty challenging. So I've always talked about separating that by separating your spending money from your saving money from your investing money. We've covered that a lot in previous episodes. and how to protect yourself. And so for this reason, I'm going to move, I've got the thing right in the way. Okay. Stable coins were invented. And for that reason, the two different stable coins that we have and were created was created way back in 2014. In 2014, we used to launch tokens on top of Bitcoin. And so a protocol, a token cell was created called Mastercoin. And Mastercoin allowed the Bitcoin community to invest in a token that was built on top of Bitcoin. So it's got its own price, it does its own thing. And that was later pivoted to something called Omni. And Omni was a precursor to Ethereum. Vitalik was working on, looking to do more with Bitcoin, ended up reaching out to the Bitcoin community and asking them to invest in a token called Ether. 2 to 3 years later, it almost went bankrupt, but they launched the network after a Bitcoin crash. This network was created that tended to get most of the tokens from there on in, because it was optimized for token creation. Then we had these things called stable coins, and one of the first tokens was a Tether. And a Tether was created in order to allow for cryptocurrency exchanges to easily send funds between each other. It was created by the same team that I'm from a company called Bitfinex, who I'm a shareholder of. They raised finance on BnkToTheFuture.com. They have their secondary market in one of our special shares on BnkToTheFuture. And they tried to get the world to use stable coins. Nobody was interested for years. But eventually it started going on exchanges. And then this little company called Binance came along and decided that because they couldn't get banking relationships, they would just trade everything against tethers. The 2017 boom came along. Everybody started buying lots of different tokens, and Binance really used Tether as its bank account, and became became the largest crypto to crypto exchange in the world, and used Tether as a mechanism to get there, where essentially Bitfinex became the bank for Binance. Later, they managed to sort out their banking, and lots of things happened along the way. But the way that a stable coin works is you have one that relies on the Federal Reserve and the others that acts like the Federal Reserve. And so Tether was the first one. And what it said is that it would back $1 for every token that it mints. So if there were 100,000 tethers, then there would have been $100,000 in a bank account. And then later they went and invested those assets into cash and cash equivalents. And over its time, it's been over-collateralized and under-collateralized. By over-collateralized, it means sometimes it had more than its balance, that sometimes it had less. It had less when the government seized about $850 million from a bank that they had to use, because Binance became the largest crypto-to-crypto market exchange in the world, by outsourcing its banking. And as more and more crypto-to-crypto exchanges emerged, banks started to try and track down where the money was for Tether. And that started to remove its ability to work with many different banks. Eventually, they had to use very risque banking relationships through no choice of their own, until the banking sector became a bit more crypto-friendly and the emergence of the crypto-friendly bank emerged. One of those bank accounts actually had their money seized from the government, which made Tether under-collateralized. And ever since then, there's been conspiracy theories all over the internet to figure out whether it's got its collateral, whether it doesn't. It now publishes the assets that it's backed by, but it hasn't been through an audit. And therefore, one of the other companies that we are shareholders in at BnkToTheFuture, Circle, came along through a partnership with another company that we're shareholders through at BnkToTheFuture, that our investors invested into, Coinbase, and created the USDC stablecoin, which managed to secure an audit partner and started doing audits from day one in a much more friendlier regulatory environment. But Tether still is King Kong in terms of stablecoins. But they provided very useful utilities. So countries that are suffering from hyperinflation could use these stable coins to gain access, and they created lots of financial inclusion. When I traveled and did tours across China, I spoke at approximately 18 different provinces. and did a tour with famous investor Jim Rogers, sharing how people could use this different innovation and Bitcoin to store their value and stable coins in order to operate as a unit of account and medium of exchange. But it was dependent upon the Federal Reserve playing nicely with the dollar. And the Federal Reserve has never played nicely with the dollar since it was created in 1914. Check out my previous broadcast on the Simon Dixon YouTube channel, where I went through its horrific history and its funding of wars in order to create more and more money to dilute the value of everyone's savings that held it for the long run and every other fiat currency. And so has happened for the last 720 fiat currencies since the 1700s that have an average lifespan of approximately 27 years before central banks destroy them. But Tether was a way of gaining access to dollars without actually having to do that. And so you could send it as easy as sending an email across the blockchain, and it became worth billions and billions and billions. Then someone came along and said, well, we don't want to have banking relationships. We don't want any dependency. And so Maker was one of the original ones with DAI that started creating algorithms that allowed you to try and maintain a peg based upon certain algorithms, certain codes and smart contracts, which we all know are subject to hacking risk. So you remove the counterparty risk of putting funds at a bank and replace it with hacker risk of creating a decentralized smart contract. And then you have the big problem of the wolf that really claims to be decentralized that isn't decentralized. And that's why most of these stable coins claim to be decentralized, but really they act like the Fed, and they are in fact their own central banks, as we discovered with the latest one that came along, which is Terra, that actually ended up creating systemic risk in the crypto and markets. And because they decided through this web of complexity that we're about to go through to back it by purchasing some Bitcoin through its various entities, they had to emergency sell their Bitcoin, creating a liquidation and frenzy that we'll go through right now. So there you are. There is a brief history in stablecoins and where we are today. So Terra came along and decided that they would act, as it were, as a central bank. The central bank came along and was printing excessively and decided to create so much inflation that they had to put up interest rates. They tried to stop the markets. They decided for as long as they could in an environment of low interest rates that they would get as many people in debt as possibly can, create real estate bubbles, create stock market bubbles, create bond market bubbles, until they reached the point where they printed so much that since the Federal Reserve has been around, people have lost 99% of their value by holding money in dollars rather than holding it in something like gold or Bitcoin. And then if you peg that to the actual, if you then look at the returns of holding Bitcoin versus the dollar, then it reached a peak of the 69 million%, as it were, across that. But more recently, that created a crash in the stock market as the Fed started to respond to the cost of living crisis. The news tells us that it's all about supply side. It's all about Putin, the evil Hitler, that has created this evil atrocity called inflation by suppressing oil through sanctions and financial weapons and mass destructions imposed upon them. But the reality is it is created on the demand side, and the Federal Reserve printing excessively to meet the demands of people that are grafted by the cost of living crisis, that then ask the government to solve the problem with the cause of the problem and create more inflation by paying for things with the cause of the problem, because no one on TV wants to talk about the cause of inflation. So we end up in a market crash, and that market crash then affects fiat thinkers. If you've seen any of my talks, I talk about Bitcoin thinkers versus fiat thinkers. Fiat thinkers see Bitcoin as a mechanism for making more fiat, and therefore they think about how much their costs and their profits are in terms of dollars, rather than Bitcoin thinkers who see fiat as a good mechanism for buying Bitcoin, and therefore the cheaper Bitcoin is relative to the dollar, the more Bitcoin they can purchase. The more expensive Bitcoin is relative to the dollar, the less Bitcoin they can purchase. So fiat thinkers are very scared by this, and they end up liquidating their positions as a result of that, even though the long-term trend is a fixed supply. That created a Bitcoin market correction next. So we ended up with a Bitcoin market correction as a result of the stock market correction, as a result of the increase in the interest rates short-term from fiat thinkers that want to sell Bitcoin when they see these trends. Now, what happens when Bitcoin crashes? Everything else crashes harder. So here's the rules of the crypto market. Bitcoin is the only digital hard sound money, and everyone has tried to copy versions of it, but they end up being created by people, central bankers, the equivalent of central bankers, that put together a group of developers and create the equivalent of an unregistered security, because there are a bunch of people that are trying to pretend to be decentralized and creating something that inevitably ends up pretty centralized. So it has various degrees of central planning. So every time Bitcoin goes up, people start speculating on all these alternative things, and the fiat thinkers try to make more money quickly. If you look at the top 20 of CoinMarketCap, every single year it's different, from the latest flavor of the month, and all these central banks, as it were, by people trying to create things that are cheaper, faster, better than Bitcoin by creating it on something that's more centralized, because the ultimate cheap, fast, speedy thing is something like PayPal, which is just a centralized database with no blockchain in the middle. So when Bitcoin crashes, everything else crashes harder. One crypto or one token of the month, Luna, started to crash. So I started to look a little bit deeper. Full disclosure, I wasn't exposed to it. Can easily happen. I do have a percentage of my Bitcoin that I use in order to accumulate more Bitcoin, but I do it in a very risk managed and asset protected way, as explained in previous broadcasts. Check out episodes 98 and 99 of BF Live if you want to understand a bit more of that. And also head over to retirementplanb.com, and I shared how I was investing during the Great Depression of the 2020s, before any of this started, when everything was at high, stock markets were at high, and no one was discussing inflation or the cost of living crisis or the wars or any of the pandemics or any other things since then. And so here you are, so when Bitcoin goes down, everything crashes harder. The problem is that the UST stablecoin, the new flavor of the month, was created to depend upon the price of both Bitcoin and this token. So how does that work? Let's dig a little bit deeper. Think about Luna as an unregistered security. So normally when you're investing in things, the regulators require you to do disclosures. When people invest in shares on BnkToTheFuture in private companies, we have to make sure that we give certain disclosures, give certain risk warnings, and there's accountability. If you say you're decentralized when you are centralized, then you can try not to give any of those disclosures, and everybody in a more free market environment comes along. Now, that's all good if people want to do that. The challenge is that you can't really complain to regulators when it goes wrong if you didn't complain to regulators when it went right, because that's how we end up with excessive regulations. When those that lose money go and then have to go to the regulators step in on the demands of people that said, you should have protected me, I lost money. And then the rich get richer because all the opportunities go to high net worth investors, because everyone else complains to a regulator and ruins it for the rest, I guess, from these things. So this cycle is a continual thing. I've talked about it many times over the year, and it's why at BnkToTheFuture, as the longest standing company in Bitcoin, we've always done things in compliance with securities laws to support the future of finance by selling these and allowing people to invest in an environment where regulations exist. And so this central bank was essentially set up. Think about Terra as a proof of stake government. So Bitcoin works off something called proof of work, which means that it was created at a time when no one cared, there was no price. And it became the largest supercomputer where all these computers were expending vast sums of electricity in order to mine Bitcoins. And it has this thing called a difficulty rate adjustment that allows it, the more people that mine, the harder it gets to mine these Bitcoins. And it's combined with a fully transparent, fully verified, fully audited monetary release mechanism, where Bitcoins are rewarded to miners for performing that task. And everybody stores a copy of the Bitcoin blockchain on these nodes. And it's statistically impossible for anyone to control it. Later, something called proof of stake came along, which essentially said, forget about expending electricity, forget about that type of security. Let's secure it by people that own the most of it. So if you own a stake in the network, you own the token, you lock it up, you perform the verification of tasks, and really those that own the tokens become like the government. It's more like a democratic government. And so the alternatives to proof of work blockchains is proof of stake blockchains. And then everyone comes along and says, hey, I can earn some stakes, I can lock up my tokens, I can earn some money, and therefore Bitcoin that or dinosaur, we don't need to get involved with that. And everybody creates all these different blockchains that are essentially governments that have different levels of democracy and centralization, and Terra is just the next one of those. So, you know, the level of sophistication involved in determining the decentralized requires doing deep due diligence, and nobody has enough time to do it for 10,000 different tokens. And so you end up with these different things that call themselves decentralized, that plugs into all these different parts of the ecosystem, and layers and layers and layers of complexity, where no one really understands what's behind the hood, behind the layer. And that's essentially what they call the Terra blockchain and the network. So in order to perform this function, you know, the Luna token and the UST stablecoin and the Terra government need to create transform labs. And transform labs is essentially the central bank of the Terra government, central bank digital currency, whatever you want to call it. And it has a chairman, just like the Federal Reserve has a chairman. And that chairman is the Do Kwon. And Do Kwon comes out and tells everyone what's happening with this network and tries to promote as many people to use it. And rather than being registered as a security, it operates as if it's a decentralized network. So the chairman of the equivalent of the Federal Reserve has to come along and say to everybody, how do we make this system work? So they code it up where they say, well, the way that this is going to work is we're going to create a burn system. And this burn system works as follows. We have a stable coin called UST. And if you want to create that stable coin, then you have to burn some Luna. And those Luna would have been distributed as an unregistered security. And as a proof of network, a proof of stake mechanism. And so people have to give up their Luna in order to create some USTs. And by this mechanism, if you want to create some Luna, you have to burn your USTs. And by burning one of the tokens, you end up creating this stable coin. And organically, it is meant to create more and more of the stable coin and decrease the supply of the token, and vice versa when you want to create the supply. And that was the mechanism by which it was meant to maintain its peg to the dollar, whereby one UST, the stable coin, rather than being backed by dollars at a bank account, is backed by this burn mechanism where people are creating it and burning it based upon these tokens. And so as more and more people create UST, it decreases the supply of Lunas, and you end up with open market operations, as it were, where the central bank can decide how the supply is done, and it's released through different layers of democratic governments, with different people voting on whether those things happen. You lock up your stakes and UST. So what did the central bank need to do in order to create lots of USTs? Well, what it needed to do is it needed to offer yield, i.e. returns, to encourage people to sell all their stable coins that were backed by dollars and sell them. And the way to do that is offer them 20% interest or APY on your stable coin. And so they create this other entity, and the protocol interacts with it, called Anchor Protocol. And Anchor Protocol says if you put your UST, if you burn some of your Luna and you create some UST, we'll pay you 20%. And because people aren't actually using it, they end up selling a bunch of their stable coins that were backed by dollars, like Tethers and USDC and Paxos or Tether Gold and various other things, because they can get 20% by just simply selling their stable coin, burning some of their Luna, and then ending up creating some UST and receive 20% on it, which needs to maintain its peg to the dollar. So sure enough, $14 billion was staked, and 70% of the network was looking for their 20% yield on their stable coins, and it became a very significant stable coin. Now, armed with all this money, what is the central bank committee to do next? Well, what they do is they create this Luna Foundation Guard. And this Luna Foundation Guard has the job of engaging in open market operations and ensuring the stability so that the peg is maintained now that it becomes a statistically significant stable coin as flavor of the month in our ecosystem. And so the central bank essentially comes along and it forms a committee. And that committee is meant to be a bunch of people that vote on what to do with all this money. They vote, and whenever the peg is removed, they can perform the equivalent of open market operations, which is where the central bank tries to manipulate the price by purchasing and selling bonds. In this case, the central bank committee at the Luna Foundation Guard decided that they wanted to buy some Bitcoin, and so they announced that they're going to create and purchase approximately $3.5 billion to $10 billion of Bitcoin. And they are also going to not just back it up by the volatile token Luna, which has the burn mechanism, but they'll also become an unregistered venture capital fund and start looking at other speculations to purchase. Now, if this is sounding familiar, you will remember, if you were around back in, God, when was it? Can't even remember my crypto history now. I think it's been so long. Either 2014 or 2015, when people were creating unregistered venture capital funds called the DAO on top of Ethereum. The whole thing imploded, and that led to one of the next regulatory crackdowns, where the SEC and the regulator told everybody, these are unregistered venture capital funds, these are unregistered securities, register with us before you do anything. And so they started to take people down for doing these things. And then it calms down a little bit. Then we end up in the ICO boom. Everyone forgets the history, starts doing it again. Then the market crashes. In 2018, we enter into a bear market. And then everyone starts pushing the barrier a little bit further, starts the cycle again, and forgets all the history and just keeps repeating the cycle because of their high time preference. They're trying to think about it in terms of how much fiat they can make by being involved in the crypto market. And they go through these cycles again and again and again. So the proof of stake starts suddenly hitting some systemic risk event because the price of Luna starts crashing. And so suddenly some undisclosed, unknown hedge fund or one of the other people that were staking suddenly pulls out $2 billion of UST and starts trying to sell hundreds of millions of it on the market. This creates a little bit of a panic. And then the price of Luna starts crashing further. And then we end up with it losing its peg. And so as people start to panic, people start to speculate on whether it's going to return. The venture capitalists that were backing it in the first place go on TV and tells people that they're going to purchase more. and then it returns to its, it may return to its peg, and other people start to follow. And then people start to wonder whether they could get discount on this stuff in order to try and believing that it may return and it may come back, because after all, it was backed by Bitcoin. They said there was there was going to be $3.5 billion to $10 billion. If you listen to the Open Market Committee, when they do their FOMC meetings and they announce what they're going to be doing in the network, in these so-called decentralized networks and decentralized stablecoins. Why is it not going to my next slide? Okay. So Terra, the next thing we know, $18 billion becomes $1 billion in the stable coin. So it goes from the top stable coin to going further and further down. And then we get this announcement and we end up that the $40 billion behind the Luna token is now $650 million. So if you're involved in the losses of this, I am very sorry for your loss. This will end up with lots and lots of regulations, because now the central bank committee at the Terra network are announcing that they're going to fork the network. They're going to try and unwind the past as if it never happened and launch a new blockchain. And this new blockchain is coming up with a central bank committee that are now voting through the democratic government that they call their blockchain, and deciding how people are going to be compensated. Everyone is raging more on Twitter. And then the regulators will use this as a reason to really clamp down and say, these are securities. Then we go through the next cycle that we wash, rinse, repeat. Wash, rinse, repeat. All the YouTube influencers run away that were telling you to buy all this stuff. While their affiliate links to the exchanges start to not get material, they start to come off YouTube one by one, and all the people creating funny faces telling you to buy all this stuff disappear one at a time. And then we get the creative destruction, which is the best time to be involved in the market, because it's where the companies that are really building shit build shit. Is where those that were not meant to be here disappear and run away, we get to really work on the future of finance and getting adoption. So in the meantime, while all of this is happening, just trying to get my slide to change because we're on the final slides. We wait for the announcement from the central bank committee. Those that have been watching BF Live for a long time are obviously, they are dollar cost averaging, and they get the opportunity to take more of their fiat that they earn each month and purchase more Bitcoin as a result of all the shenanigans that these cycles keep repeating themselves. And then the fundamentals of Bitcoin still remain unchanged. The blockchain gets stronger. The blockchain continues to be decentralized. Proof of work continues to be the mechanism. And then everyone starts to look at, well, maybe I should check out that thing called Bitcoin. In the meantime, those who were buying all the shares in companies on BnkToTheFuture and investing for the long term with a lower time preference end up with all of the profits from all those exchanges that have to stay on top of all these crazy things. And the top 20 coin market cap that changes every single year, they end up with shares in those exchanges. Those exchanges end up having to do all of the different things through NFTs and metaverses and stable coins and staking and all the flavor of the months. And you end up with a company that becomes more and more valuable and an ecosystem that step by step, one by one, ends up returning to digital hard sound money and the possibilities that it produces. And for those that have a longer time preference, that are able to dollar cost average, take advantage of all these opportunities, and do what I tried to get everyone to do, learn that there is the sustainable ways of investing in this industry that we've put back on retirementplanb.com in that 4-part video series. And hopefully you survive this storm. But here's the thing. If you survive it, There is incredible amount of innovation, incredible amount of learning opportunities. And we will continue to offer our online wealth management program for those that really want to build longer term and learn from those that have built and protected their wealth through every cycle and completely change their financial future by thinking more long term and doing things more sustainably, where they can take advantage of these trends, but without having to take the crazy risks. But education is the most important thing. So if you end up coming from this, learning more, then you may have missed the announcements from the president of El Salvador that right now, as we speak, has gathered 44 fiat central bankers that have been shafted by the US dollar system the most, that are all meeting together in order to figure out how the countries with the lowest level of financial inclusion, with the people that are being shafted by the cost of living crisis on a scale that many of us have never experienced, can figure out how they can take advantage of these opportunities that Bitcoin presents itself to be legal tender, digital hard sound money, and increase the sovereignty and freedoms of individuals, companies, and countries that want to use it. And so if you check this out, here is the meeting that's happening right now. And this brings us full circle to the presentation that I gave on Monday on the Simon Dixon YouTube channel that will lead you to the history, so that we can get back to the fundamental principles that make this industry one of the most exciting times to be alive in financial history. And that is why we are here, and how we have managed to survive and be the longest standing company in Bitcoin, and created so many investors that have built and protect their wealth by thinking more long term, and figuring out how to do this, and we'll continue to educate as well. So I hope you enjoyed that presentation. The next part of this is going to be me answering as many questions as we can. I'm currently on the move. There is so many exciting things happening in Bitcoin. I'm very excited that because of these systemic risk events, that more and more people get to purchase Bitcoin at better rates. And I hope by being longer term, they're surviving these cost of living crisis and getting on the right side of wealth inequality as this industry continues to evolve. And let's move over to the Slido board. So Azad, what you got for me? For those of you that weren't there at the beginning, you can hit that QR code, scan it rather. If you enjoyed that presentation, do me a favor, hit the like button, and please do share this. And if you're not a subscriber to the Bank to the Future YouTube channel, we really dig deep into more investing principles that I use, and that are investors that we learn from having the largest community of investors building and protecting their wealth in the alternative finance sector, by investing in the shares of companies, the virtual assets, and doing it in a responsible way, and with time-tested wealth management principles developed for this industry. So scan that QR code, or you can head over to slido.com and put in BF, where are we? BF100, and that will take you here. No account needed. You can upvote other people's questions. So Azad, let's jump into the question portion.
First question, I am a first-round Celsius equity investor living in Europe, but with less than 1 million net worth. How can I sell my stocks on secondary?
So at Bank to the Future, we have what's known as a primary market and secondary market. The primary market is when a company such as Celsius comes to us and they look to allow their community and our community of investors to buy shares in their companies. So those with a higher time preference that are longer term thinkers can benefit from the upside of the long-term growth and have a forced hodl because it's not that liquid. And so when we also have what's known as a secondary market. We're currently restructuring it. Once we've completed the restructuring project, which we expect to be by the end of this year, we then allow people to sell their shares to other investors if they choose. At the moment, we have a technology called BF Identity, and that technology we've always adjusted it to be in line with regulations as they evolve. Our current regulator has asked us to only sell these shares to what's known as tier 4 investors. So at the moment, you have to certify that you have at least $1 million of net worth, and then you can use the platform. We're applying for a license that allows non-high net worth investors to be able to use the platform in several jurisdictions. And the second that's available, then those that invested in the primary market that may not be high net worth yet, if we secure that license, should be able to use that on the secondary market. So certify your account as what's known as tier 3. And tier 3 is where you certify whatever your net worth is. And then you should be able to gain access as soon as the secondary market becomes available. But the way that you make money in Bank to the Future is holding for the long term. It rewards the long term, just like those that held Bitcoin for the long term were rewarded the most. It's same with shares. Some companies will go bust in the long term. Others will do incredibly well. And we've had more multi-billion-dollar unicorns, like companies that went public on the stock market, like Coinbase. And if you held it all the way through, then you got to make the most amount there. Or a company like Bitfinex, which paid out a lot of its returns in dividends, or a company like Bitstamp that was eventually acquired by another company. So an exit where the returns are made is by holding it longer, eventually, and the company going public, paying out dividends, which is less likely because most of them are investing in growth. Or they get acquired, or if you have to sell sooner, there's always other investors on Bank to the Future when we relaunch our secondary market. And Celsius will be one of those companies that we'll put on our secondary market once we've completed the new restructuring project. Next question.
Question from Grebulon. Best cold wallet, best hot wallet. Interested in your thoughts.
So it's not really a good idea for me to make recommendations. I can tell you wallets that I have used, and I've used a lot of them. So in terms of, and again, I'll try and disclose when I am a shareholder, because I'm a shareholder in over 100 companies in the industry through Bank to the Future. But if you're using hardware wallets, then the two time-tested players, and there's more coming along, like Jack Dorsey from Twitter is creating new ones, or ex-Twitter, rather. But there's Ledger and Trezor. You can connect those to platforms that have raised finance through Bank to the Future, such as Exodus, beautiful user experience. Edge is another one that raised finance through Bank to the Future. And there's many more out there. There's Lightning wallets like Moon. It depends really what you're doing. And then there's more centralized wallets, those that are not ready to custody. And then there are investments from those that want to put their funds at risk. Now, what I tend to do is if you do the Retirement Plan B video series, you could also join our online wealth management program, where we go through all the different types of wallets and exchanges and parts of the ecosystem that are right for you to consider if you are spending, saving, investing in different protocols, and so that you can really protect your assets and diversify accordingly, which is the key to staying in the game. If there is one thing that will keep you in this game, it is asset protection and diversification. So if you head over to BnkToTheFuture.com and click on the online coaching program link, that should be the online wealth management program. It will take you to where you can register and join us if you would like to really build longer term. I'm in a hotel at the moment, so the cleaners might knock on the door and ring the bell soon. Okay, next question.
Okay, question from Alfonso. Will current Bank to the Future shareholders receive dividend periodically? Will dividends be in Bitcoin, Ether, like last Christmas?
No, so if you invested in BF Global, BF Global was the first company. So BF Global is the parent company behind Bank to the Future. As far as I know, we were the first company that I know of to implement a Bitcoin standard. And by a Bitcoin standard, it means that we earn money in dollars and we earn money in Bitcoin. And we always kept our Bitcoin and made sure that we managed our expenses so that we didn't aggressively grow too fast, so that we had enough dollars to cover our overhead. And then we build up a Bitcoin position, and over time, those Bitcoin position has meant that we've never needed to do venture capital funding. And really, we've been able to just have our shareholders as our loyal community members. We did pay out over time. We have paid out some good dividends based upon implementing a Bitcoin standard. But really, we are going to be in the next investor update. If you are a BF Global shareholder, I'll be going through a more aggressive growth strategy that we're looking to implement in order to grow the share value of BF Global. So it's not dividends are not a good reason. It's not a reason to invest in companies. It's more for share price growth, which is where most of the returns are made, and it's like a bonus when they pay a dividend. Next question.
A question from John. Hi, how far along are you with the new licenses? How high probability would you say there are for the licenses to be approved this year? If they are low, how about next year?
So having been involved in license applications for over a decade now, I can never second guess regulators, and I hate doing it. However, said that, I would be extremely disappointed if those licenses did not come through this year, but I've been very disappointed on many occasions. But what I can tell you is that we have doubled and I think almost tripled the size of our compliance team. And our team are working away very hard in multiple jurisdictions to secure those licenses. I believe that we have one of the best track records in the industry. I believe that there are many jurisdictions that would see this as an ideal opportunity to work with Bank to the Future. Now, can I guarantee such a thing? It's regulators. Regulators get to say it. There are more jurisdictions, and we'll keep plugging away. But anytime you put a time frame on it, it always takes longer, especially when involved in crypto, dealing with the bureaucracies. We're pretty experienced at it right now, so I would be very disappointed if we weren't able to offer those services by the end of this year.
How does private money creation and allocation versus public money creation and allocation compare and contrast in terms of damage done and perhaps benefit, if there is any, to people and the economy?
Yeah, it's a bit of a deep question. I don't think I could fully answer that one. Sorry to divert across, but I'd need to really deconstruct that question a bit more. And it's a bit more economics related than investing related. So I'm going to pass on that one for now. Not a study I've done, I don't think.
Are you behind SimonDixon.com?
No, SimonDixon.com is not me. And if they're asking you to send them some Bitcoin, you're about to be scammed. Don't send them anything. If Simon Dixon contacts you on Telegram and asks you to send them some Bitcoin, don't do it. They're going to scam you. If Simon Dixon contacts you on Twitter and DMs you or emails you or creates a website and then follows up in any way, shape or form, it is not me. It is an impersonator, but I'm not SimonDixon.com. I believe we do have the SimonDixon.me website. Wow, I used to blog on that. Like my early blogs before even Bitcoin was created on money creation. But that I really need to dust off that old website and have a look at that one. Haven't looked at that one for a while.
When will Retirement Plan B open to US investors?
Retirement Plan B online wealth management program is open to US investors. So if you want to do the wealth management program, just go to BnkToTheFuture.com and click on the, I think it says online coaching program at the moment. We'll get that updated. Make sure you take a note of that if any of the team are listening to this broadcast. And you can join there. Now, in terms of the portfolio builder, we're currently, we have it in front of the US regulators. And the US regulators are dealing with trying to figure out stable coins, trying to figure out yield, but we do it as securities. So if there's one regulator that I don't want to second guess, it's the US regulator. We've got the tax opinions, we've got the compliance opinions. We are currently working with the broker and US regulators, and they don't give you a deadline for us, unfortunately. As soon as we can make it available, it will definitely be accredited US investors only, if we can do it. But as soon as we get an answer on that, then we'll make sure that we are open on the portfolio builder service. In the meantime, if you wanted to do the wealth management program, it guides you on how to do it on your own as well. without using the portfolio builder. And we have a community of people doing that at the moment.
Okay, question from Sid. With countries like India taxing people 30% plus 1%, and they are talking about also adding on a GST of 28%, does it still make sense to invest in Bitcoin being a citizen in this country?
I can't give you tax advice, but you might want to speak to your tax advisor and figure out if there's any optimum structures for you to make those purchases. That's why retirement plans are created, so that you can do asset protection and see if there's more efficiencies by doing it in line with the law. And retirement plans were designed to do that. That's what we cover in the online wealth management program. There's a section on structuring, and our tax advisors do come in and have given some content there as well to make you think about those things. But yes, if you do invest in these products as an individual, then you need to check out the tax liabilities in your country. Does it still make sense? Well, you need to remember that is a tax on profits. I don't know your tax system, and I can't give tax advice, I have to say, but a tax on profits means that there are profits. So either you can do a tax efficient structure, but if you hold fiat money and don't participate, then you're at the mercy of inflation, and you still, even after tax on your profits or your gains, whatever it may be, then it still might, you have to do the maths and you have to do a bit of financial planning there for you.
Question from Peter. Are the central bankers in El Salvador gathered there out of curiosity about Bitcoin, or are they at a more advanced stage to develop a joint plan to adopt Bitcoin following El Salvador's lead?
Yeah, I'll give you the updates as soon as I have them. I'm looking forward to catching up with those that I've connected with over this year. So I will give you an update as soon as I have it. But my guess is that these are curious people that are enrolling into a vision of a president that has stood up to the International Monetary Fund and other central bankers, and they're currently being orange pilled. And they're experiencing for the first time what it's like to do final settlement and actually send money that can't be reversed, and understand the monetary policy of the Bitcoin ecosystem. So that's an exciting development. Now, how advanced they are, I'm sure it's various levels, and that some people are probably really advanced in putting together a strategy of how they can coordinate to advance to the next stage, and others are curious and tinkering and have no intention of being involved. I'm sure there's all those degrees across those different members.
Hi, Simon. Talking about Celsius, what's your opinion regarding their business model and their necessity to generate yield to satisfy their customers in an environment where things can turn ugly quickly?
So I always said that when you are involved in the industry, you have three different things. You have spending, you have savings, and you have investing. When you are earning yield on Celsius, I classify that investing. And investing means that you're looking for a greater return by taking greater risk. And there's risks involved in every investment that you make, whether it be counterparty risk, whether it be borrower risk in that case, whether it be, it's a game of risk management. And that's what we always cover in the online wealth management program, how to get the optimum risk management to be prepared for all outcomes. So if one place blows up, then another one does very well. Now, I'm not saying that's not opinion on Celsius, but Celsius is an investment vehicle. You are receiving yield because they are finding people that want to borrow it. And they have a risk management department, probably one of the best risk management departments and teams out there, because they have brought over executives from banks that are experienced at this. Alex Mazinski, I spoke to him to find out if everything's okay. He's reassured me everything's okay. But these are, centralized financial institutions, and regulations are there in order to put some protections there. And that's why things are going through big, aggressive regulations at the moment. And so at the moment, I am a user of Celsius and a shareholder in Celsius, full disclosure. But I risk manage it. Does that mean that I put, I don't have, if Celsius blows up, it manages or it explodes my entire financial future? Absolutely not. I risk manage those things. But Celsius are doing the best job they can do in order to manage an industry that is moving at a very fast pace, and diversify different opportunities and react to different environments. And they built a team in order to manage those risks. So you are investing in their risk management, and then you need to manage your own risk.
Please speak on Veritasium Reggae Middleton and his DeFi patents. I think it's DeFi or DeFi. To continue to ignore his existence looks really disingenuous, like a bunch of pirates, possibly in league with the crown once again, and has given at least me pause.
So not a story I know about, but it's an old school name. Reggie Middleton was someone that launched a token during the ICO boom and got fined for the SEC for running an unregistered security. Now, if a bunch of patents have popped up, it's not a story I'm familiar with. Haven't really got too much to comment on it, but I'm sure it's another flavor of the month story designed to create fear, uncertainty, and doubt around some patents. But I do remember Reggie Middleton making some pretty wild claims back in the day that got him in trouble with the SEC. No opinion on that. I'm just sharing my experience from things that happened a long time ago.
Can you discuss what the Celsius mining IPO means for Series A investors? I guess this will be the last question, unless you want to take a second one.
We could do another one after this. So the best people to ask is when we are currently working with the Celsius team. They have raised way before any of this. So if the conspiracy theories come out, I'm sure they're coming out. But they raised approximately 750 million. They saved some for our investors. When that pitch goes live, once the timing is right, they're trying to be very sensitive to people that have experienced losses as a result of the crash. There's a lot of newbies within the Celsius network. And so they have to support people. They have phone centers and all sorts of stuff, call centers to support people if they're new to this, and hopefully this education helps as well. But the best people to ask will be the Celsius team. My understanding, and don't quote me on this, is that it is a subsidiary of the parent company. And our team would have done some DD there. And then you can ask the Celsius team and get an answer directly from them. When the new pitch goes live, there's an investor zone on every pitch. Is due to be one of the next pitches that we put live on Bank to the Future, and to allocate that little bit that was left over for the community that want to invest in the shares of Celsius that missed the last round. So yeah.
Big final question. Question from Sue K. How can the world financial system be revamped to avoid Triffin's dilemma? Do we need a two-tiered system for both a world trading currency and world neutral reserve asset?
Big question, but I will just leave it as absolutely we need a two-tiered system, and we have a two-tiered system. I believe that two-tiered system will end up as central bank digital currencies and Bitcoin, and a lot of stuff that exists on top of that that's built on top. And so that two-tier system is because the median of exchange, which is why stablecoins were created in the first place, in order to take out some of that volatility and you manage your spending money, and then how you allocate savings and investing will determine wealth inequality and which side of the financial system you end up with. So that's the last question. We can stop the screen share. And I hope you enjoyed episode 100 of Bank to the Future Live. Let us know in the comment section what you would like us to see. If you've got more questions, we do read those comments. Let us know what you'd like to see. And do me a favor, if you thought that somebody else would benefit from experiencing some of this education. We're pretty OG here. We've been through all these different things, and we like to share as much as we can to make you a better investor so that you can come out on the other side through learning more. If you if you like that, then please do like. It really helps with the YouTube algorithms. The 99th episode of Bank to the Future Live was one of the highest views we've received. Let's get 100 to have more views to celebrate this moment when you get to accumulate Bitcoin at lower rates because of the different shenanigans that have happened within our ecosystem. Remember to always come back stronger. You have a choice right now. You're either staying with the system and deciding to do things differently, or you're exiting the system and deciding to get back to the fiat debt-based Ponzi scheme. I believe there will be a two-tiered system. Always remember, you are alive at one of the most interesting, exciting times in financial history. And that's going to do it for episode 100 of Bank to the Future Live. Hit that subscribe button, hit the bell symbol, hit all, and we'll notify you when we go live this time next week for episode 101. Peace